Good morning, traders. It's a beautiful sunny Monday morning here in the Czech Republic. It's June the 9th, 2025, and here's your global commodities market briefing. Oil markets are steady after last week's gains, with Brent crude holding at $66.57 per barrel and WTI at $64.59. As traders await the outcome of high-stakes US-China trade talks in London later today. The anticipation of a possible trade deal is supporting prices, even as weak Chinese economic data and a recent OPEC supply increase weigh on sentiment. If you're trading crude, consider a tactical approach. Look for volatility around the trade talks and be prepared to fade sharp moves if negotiations stall or headlines disappoint. Silver is in focus this morning, up 0.21% globally to $36.5 an ounce as investors build fresh positions. This comes amid robust industrial demand and heightened safe haven interest. If you're in silver, think about scalping into longs on dips, but watch for profit taking if industrial sentiment softens. Gold opened lower today as markets digest a stronger than expected US jobs report that has cooled expectations for imminent Fed rate cuts. After last week's volatility driven by shifting US-China trade sentiment and geopolitical risks, gold is likely to remain sensitive to macro headlines. If you're trading gold, maintain a nimble stance. Use options to hedge against further downside, but be ready to re-enter on renewed risk-off flows. Base metals are mixed. Zinc and aluminium futures are both down in early trade, reflecting weaker demand from consuming industries. Zinc slipped 0.26% and aluminium 0.23% on MCX, while copper remains supported by ongoing supply disruptions in Chile and the DRC, as well as tightening aluminium inventories. If you're active in base metals, consider shorting zinc and aluminium on rallies, but stay alert for upside in copper if supply risks escalate. In grains, bearish sentiment among funds in US corn and soybeans has hit a 9-month high, despite strong exports and ethanol demand. The market is watching for potential weather disruptions as the US corn belt, with forecasts hinting at a possible dry spell over the next 2 weeks. If you're trading grains, keep positions light and watch the weather closely. Any adverse shift could spark a sharp reversal in sentiment. Geopolitically, the market is laser focused on today's US-China trade talks, which follow a rare direct call between Presidents Trump and Xi. Tariff rollbacks, export controls, and rare earth supply chains are all on the table, and any breakthrough or breakdown will move risk assets across the board. If you're trading oil, metals, or grains, today's US-China headlines and shifting macro signals are your key catalysts. Position for volatility, use options for risk management, and be ready to move fast as the news breaks.